Hi, this is Tony Turner, and welcome to the market now as of about 2:30 p.m. Eastern on Friday, September 26th. Data showing the U.S. economy grew at its fastest pace in more than 2 years in the second quarter, boosted the dollar and U.S. stocks today, while news that high-profile investor Bill Gross is leaving PIMCO for a rival firm rattled the bond market. U.S. stocks bounced back today from their losses on Thursday when major indexes posted their biggest declines since July 31st. The dollar was heading toward an 11th straight week of gains against a basket of currencies that would extend the longest winning streak of the U.S. dollar since its 1971 free float under President Nixon. Now let's look at 3 charts that could give us some insight into the week to come. First of all, today we're going to look at a weekly chart of the SPY, the S&P 500 Spider ETF, which of course follows the S&P 500 index itself. Since we're coming into the end of the third quarter here, I thought it appropriate that we look at a little longer term chart, especially since we've had a down week in the market. I wanted to see exactly what's being tested and what's going on here. Now, if we look at this chart, we can see that the S&P 500 or the SPY last week made an intra-week high of $201.90. Of course, that takes it over 2,000 on the S&P 500 itself. Now that's after bouncing from the recent August lows right here, this pivot of $190.55. Since then, however, the SPY has pulled back in this last week. Right now it's trading at $197.08, or right around 1970 on the S&P 500 itself. Now our next level of support here is 195, or about 1950 on the S&P 500. As you can see here, let's look at some indicators. It's been a down week. We've got a big red week right here. Now we've also had a couple of other great big down weeks. The last one was in July. We can see that we had high volume here, and the week ended, Friday ended on near or at or near the lows. Today that's happening, the same thing is happening. If we look at our 14-week moving average that we see on this, the black line on this chart, we can see that the SPY is sitting right on top of it right now, and that's a pretty good moving average. We can also see this really long-term blue trend line on this chart, uptrend line, a really nice one. It actually goes from back in, and I put up this longer-term chart so you could see it. It actually goes from November of 2012. See, it start back here from November 2012. This trend line, we can touch a whole bunch of lows from November 2012 through 2013. There's a low, pivot low there. We can touch another pivot low there right at the end of September, beginning of October. Moving into 2014, we can touch our February low there. We can touch a March pivot there. Not much of a pivot, a little bit of one. The next one coming up in late July, early August. And now, if we extend that line with all of these touches, 1, 2, 3, 4, 5, 6, 7, of course, we don't know that this is a pivot today or this week. But we can see this is a strong, it is a major uptrend line. So should the SPY fall below it, which means it would fall below it in the coming week below 197, where it is right now, below 1970. If it is to do so, that's going to break a really long uptrend line, and it's on a weekly chart, not a daily chart, so it even has more power. Now, again, we saw that that we do have this support here at 195, so that's good to know. Let's look at one more thing here, actually 2 more things. We do have here a very slight bearish divergence. I pointed out to you in last session, it was on a daily chart. Now it's on a weekly chart. We have a bearish divergence on the RSI, the 14-week RSI on this weekly chart. As well, we're showing a divergence on the MACD, meaning it is making a lower high here when actually the S&P 500 made a higher high. These two indicators are saying we're not impressed. It looks like a lower high to me, and of course a lower high means that the sellers are out in force and they're winning at the current moment. So all of this means to me, and I said this last session, I mentioned in our last session that the final week of September is typically a volatile one. We plan accordingly. I did just that. I raised some cash, and after yesterday, I'm certainly glad I did. I'm going to pay attention here. I'm going to remain conservative. I'm going to keep my protective stops in while we still are in a very, very nice uptrend here. That's not to be argued. We do see a few raindrops coming in here, and I want to just keep an eye on them and pay attention, trade wisely, trade conservatively, until we see if this uptrend can continue, bounce higher again, or if in fact it needs to take a rest. Our next chart is a chart of the PowerShares QQQ. This is also a weekly chart. As you all know, the QQQ follows the NASDAQ 100, the top non-financial stocks in the NASDAQ stock market. Now, I've gone back to the same November lows on this chart back in 2012, had a very nice trend line that the price finally diverged from and actually went higher. This trend line comes in at 85 and may offer some support. Our short-term trend that we're looking at now, though, from March of 2014, and this trend line, which now has intersected for the last few months with the 14-week moving average. So we have a moving average and a trend line coming in together, making that a pretty strong indicator. The QQQ closed, or is trading right now, close to closing at $98.15 today. We know that in the prior week it made a high of $100.56. This is a relative high. The all-time high was back quite a few years ago at $120. At any rate, what we're looking at here is a strong trend line from April, shorter trend line, but certainly there, moving average. And we have to see here if the Qs can stay in this uptrend. Right now, again, they're sitting on the trend. It's sitting right at the trend line, right at the moving average at $98 and change. The bearish divergence here is not as strong as it is on the S&P 500. What it shows here are the Qs are making higher highs. The RSI here is just going sideways. It's not making a higher high. It's going sideways, and in the last week, it's, of course, hooked down a little bit from the overbought position that it has been in. Also today, our MACD line is moving, or it's on. It hasn't hooked yet below its MACD signal line on this weekly chart, but we're keeping an eye on it. Also notice the same 2 weeks of distribution, that week, last week in July, and then this week as well. Down week on high volume. There were definitely some sellers around this week. Because growth stocks, big momentum stocks, tend to fall faster than value stocks, if you have the growth stocks, a lot of them are listed in the QQQ, such as Google, Priceline, Facebook, even Apple and so forth, you might just want to be a little bit careful with these coming into the next weeks until we see if the tech index, the growth index, can start moving higher again. Our final chart today is a daily chart of the iShares Russell 2000 ETF, symbol IWM. This is a daily chart. The IWM is a great way to follow the Russell 2000. Of course, you can trade it as well. Now, we use the Russell 2000, again, that's the one of the small cap indexes, one of the best known ones, as like an internal indicator, a leading indicator for the overall markets. As you can see, unlike the S&P moving higher and making new highs, unlike the Qs, the PowerShares Q, which has been rising and rising and rising. The IWM actually made its last high in June, pretty well even with its high right around the beginning of March, if I could draw a straight line, and then started into a triangle formation, making a lower high here and actually making a higher low here. So if we connect all that, we can see that this is a triangle formation. What we want to see here is when we extend these lines, which way our asset will go. Will it break above the triangle? If so, that's very bullish. Will it break below the triangle? If so, it's bearish. Freight in this case, the IWM moved lower, broke that triangle. We also see the death cross, the 50-day moving average crossing down below the 200-day moving average. That happened at the end of last week. Now, we definitely see some distribution days here, all during last week's price action, big red days on high volume. So we've got that right now. As I speak, the IWM is trading at $110.57. We have the May 15th low here is $107.44. Our August low is $109.89. We can call it 110 right here. So what we don't want to see here is we don't want to see the IWM fall below that 110 mark. That could mean that it could head a little lower. If it did so, our next low down, as I just mentioned, is about 107 and change. You can't see it on this chart, but the next support level down is from way back in November of 2013, and that is at about 103. So we're not in, and we're not in correction territory here yet. We're not 10% off the highs, but we're very close. So at any rate, this is something that you'll also want to keep an eye on. Again, a few raindrops here, perhaps even going to fall on our broader markets. We just have to be conservative, pay attention, and it should be all right. Now, we'll go on to next week's economic reports. Monday, we have the PCE and pending home sales. Tuesday, we have the Case-Shiller Index, Chicago PMI, and consumer confidence. Wednesday, we have the ADP report, employment report, the ISM, crude inventories, auto and truck sales. Thursday, we have jobless claims, and on Friday, we have our usual monthly jobs numbers, which of course also includes the unemployment numbers. So that's always very important. Until next week, keep green on your screen. I'm Tony Turner, and this is The Market Now.